Hello everyone, this is Evan here from the Trade Risk on Friday, April 21st here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. Now I hope you're doing well out there. We had a nice rally this week. We are here on Friday and going into the weekend, so there's a couple of things to look forward to and be happy about. Let's get into the markets here with the S&P 500 SPY ETF. Finished lower on Friday, down minus 0.32%, but we had a strong finish to the week. We finished up almost 1% here in the SPY ETF. Now, if we stick with this weekly time frame, you can see the same kind of pattern, the same formation that we've been in is still in place. We have a uptrend in place here on the weekly chart, and we've been consolidating now for almost 8 weeks ever since the top out here in the beginning of March. And you can see over the past 4 weeks, it's been mostly sideways action. The 8-period EMA here on the weekly charts flattening out, 20-period still rising, still below price and supporting this trend to the upside. Now, if we go down to the daily time frame, it's a bit noisier here. So on Wednesday, we had our midweek update out, and we kind of finished on Wednesday with this reversal day. We opened up near the highs, tried to push higher, failed, and then closed on the lows. That's some bearish behavior there that we pointed out on Wednesday, but you can see no follow through to that move. We in fact gapped higher and then had a strong session yesterday on Thursday, finishing up 81 basis points yesterday on Thursday, but no follow through here on Friday, no follow through to the end of the week. So a little bit of a zigzag there, but bulls getting some momentum this week, right? We saved ourselves from last Thursday's, sort of horrendous close here to finish off the week. We saw no follow through to the downside, and bulls just basically grinded out new highs all week. So some short-term momentum is in play, but here is the bigger sort of concern. If we go to the cash market, I think this paints a clearer picture. You can see this trend line that extends more or less from the highs here in March is right in play. That's where we closed yesterday. That's where we found some resistance here on Friday. And then this horizontal level that's acted as support throughout the end of February, some points in March, and then recently here in April, we're right into this level as well. So it's this 2355 to 2360 zone here on the cash market. That is the level that we really want to see broken through with some authority to really get more optimistic on the long side, for bulls to regain that fresh sort of momentum burst to the upside. This is what we want to see taken out. We want to see the market kind of march higher from exactly where we are right now. If we go back to the SPY, you can see, again, the bulls did the defensive work this week. We did hold on to these lows. We didn't roll over, and we grinded out the highs, and we're just at this horizontal level. So it's a bit of, sort of a neutral stance here, very short term. In the next, 2 to 4 days, there's some momentum here as we've grinded higher. But at this point now, bumping up against this resistance, this trend line, and then this sort of key horizontal level, this is where we want to see us, really get above and not roll over here. We don't want to see another Friday like we saw today, another stumble and a rollover and a break of this, sort of accelerated multi-day trend line. Otherwise, it's back to the lows potentially if this market can't muster up the strength here to reclaim and hold and break through these levels. So very tactical, very noisy, kind of messy right now, but it's kind of an inflection area. There's a lot of news on deck. We have, of course, the French elections this weekend that the market may have some anxiety about. We have the whole government shutdown that could come into play on the budget side in the next week or two. We also have earnings season that we're slogging through. So there's a lot of reasons why this market at this point can be just moving sideways in sort of a back and forth, relative complacent, trading environment, just given all of the sort of catalysts that we have potentially in front of us. Now, if we go to the IWM, we saw a nice rally here, outperformed everything on the week, almost 3% to the upside. Again, saved ourselves from breaking down and rolling over from this long-term support area, and we really just kind of pushed higher all week. Now, if we zoom out, you can see we're very quickly coming back to resistance. This 138 area has more or less been resistance, except for this brief kind of breakout above here, which ended up being a rollover and kind of a fake out. So we're coming back up to the top of this range. That's all also, a rally into resistance. And then the NASDAQ 100, you can see back to its old highs, had an all-time closing high weekly close here. So again, very optimistic or very encouraging here from the Qs. But could this turn into a fake out? It could, as we test this resistance. So we have the Qs at resistance, we have the IWM, which is basically at or very close to resistance, and then we have the SPY at this general inflection point. So sort of sum it all up, I mean, the rally this week across the board was nice. We saw some nice defensive saves by the bulls. We got some near-term momentum building. Now let's see if we can really start to break through this upside resistance across the board, right? In the SPY, the IWM, and the Qs. That's what we'll be paying attention to next week. If we start to break down, if we start to lose these lows here from Friday and we start to break this trend line, and for the IWM, if we start to roll over here, or the Qs, we start to fail here at these prior highs, those are going to be, that'll certainly be the sort of point of concern and, potentially more range-bound behavior as more of this news sort of unfolds and as we move through sort of earnings season. So that is the overview there on the major markets. Let's start to get into some of the other markets out there. We'll start with TLT, which saw a little bit of a pullback here towards the end of the week. You could see the past 3 days, Wednesday, Thursday, and Friday, we were down just a bit. Volume is light. The uptrend is higher. We broke through this 122 level to the upside. So bulls still dominating this time frame here on the daily chart. The 8 and 20 are still rising. Price is still above the 8 period. So there's still a lot to like here. We're going to see if dip buyers can support this. Maybe there's a higher low that needs to get put in. Maybe retest this old 122 level. But so far, buyers still in control there on the TLT. Next, if we go to GLD, same kind of story here, holding up, a little bit of weakness towards the end of the week, but look at this volume that's coming in here on GLD. Nice strong upticks in volume here over the past several sessions, over the 50-day moving average of volume. So still encouraging. Uptrend here is still in place on the daily, and again breaking out from this longer term trend line just last week. So GLD still in motion to the upside. Silver, we started to discuss this struggle here that silver was sort of underperforming recently as it started to have some difficulty holding above this general trend line and these general highs here from March and beginning of April. And you can see that's still pretty much in play. It's not, game over here for the bulls. We are finding some stabilization, particularly on Friday. You can see we tried to probe lower and we kind of hammered it out. Finished lower on the day Friday, finished lower on the week by almost 3%. But if silver can continue to sort of base out here and then start to lift back above 1750, maybe later this going into May or mid-May or something like that, I think that would still be healthy. So something I'm paying attention to now for a potential trade and emerging from what could be a higher low and some type of consolidation there in silver. I think it's worth watching. If we go into oil, this is continues to be in rollover mode here. Wednesday we had, again in our midweek update, we talked about this session here, almost 4%, really dominating and kind of uptick in volume, really kind of dominating the nearby action. And we just saw more follow through off of it. No stabilization at all. So sellers seem to be back in control here in USO after this V-shaped rally to retest this old range, failed, and then we are rolling over pretty hard here. So I'd be cautious there in USO. I think sellers, again, in control. I'd want to be playing that side, not looking to buy a dip there in USO at this point. Near term, it could be oversold for a quick bounce, for a quick, multi-day trade if you're super tactical. But structurally, I think you need to be a little cautious there in USO. It's the way I see it, at least. Natural gas also, struggling here a bit after snapping this trend line, this channel that it was in. It moved sideways, and then it looks like it's trying to roll over, particularly here on Friday, down minus 1.6%. So again, this is another one where I'd want to be a little cautious. I would want to avoid until it can reclaim maybe 760 or so, start to get back above this recent supply, these recent lows and support that was trying to be carved out here. Once we can reclaim that, I think maybe you get a trade back to the upside. But for now, UNG looks pretty vulnerable. And what else? Is that everything? I think that's everything. So with that, let's get into some of the sectors You know, really it's the same suspects here. IYR on the upside, real estate, probably not one that we talk about too often, but has been doing very well. It's pulled off here just a bit on Friday, but you can see a nice uptrend overall ever since, you know, really March, beginning of March, mid-March. It's had this nice move higher back to retest sort of the highs here for the year. So IYR recently has been in a nice little uptrend. XLU continues to hold up in this consolidation, hasn't made a move, started to pull off Wednesday, pulled off more on Thursday, but then it saw that quick recovery here on Friday. So still holding up, still outperforming on a relative basis. Utilities getting it done, and so are the staples, which again, more defensive areas of the market. You're seeing TLT work, you're seeing XLU work, you're seeing the staples work, you're seeing gold, you know, stay pretty bid. So there's that safety trade is on right now. It's been on, and it just kind of continues to work and at least keeps a bid under those general, you know, safer haven markets, if you will. Staples coming off a bit here on Friday, but still on a relative basis, they're holding up pretty nicely. And XLY, which is the discretionary ETF, is arguably the best looking here. If you go to the monthly chart, take a look at this, all-time highs here, and you know, really just kind of getting the job done. Thursday was the nice breakout day. Friday a bit of an inside day here, but this group here is working. These are names. This is, you know, Amazon makes up a big component of this. I believe Netflix, Comcast, Best Buy, those types of names all in this sort of sector in this ETF here. So something to pay attention to. Take a look at those names if you're scanning this weekend for some of those long ideas. On the downside, it's really XLE, which is looking fairly ugly as it starts to resolve below the lows here from the beginning, or the end of March. We, you know, kind of cratered back through this trend line and this horizontal support. So XLE is definitely something I would be I'd be avoiding at this point until we can, you know, reclaim 69. If we make a sharp move, you know, next week back above $69, $70, I'll change my opinion on it. But for now, XLE I would be concerned with. XLF also something to pay attention to. It's sitting at this kind of high stakes level here. I still think this level is generally obvious. I think there's a lot of eyes on it right now. It doesn't mean we can't break through it. Doesn't mean we can't rally off of it. Just generally means there's, you know, a lot of headaches until people start to forget or you know, throw in the towel here. So XLF, $23. Important level to watch on multiple time frames. And I think that's it. I think that's the last sector I want to talk about. So with that, thank you guys for watching. Have a great rest of the weekend. If you like the videos, do subscribe. And thank you again for watching. Talk to you again soon.